where we look at the solutions instead of the problems. Today, we're talking to Simon Dixon of Bank to the Future. He's been around since almost the beginning. He's got a wealth of knowledge. Stacey.
We want to talk to you about the solution for diamond hands, as it's called in Bitcoin. The last episode, Max and I discussed Bitcoin fixes everything, essentially, especially with the monetary system, the banking system, central banks, all that sort of stuff. But once you have your Bitcoin, the having in the diamond hands, holding on to it, not having spinach hands, panic selling during this correction. And this could be the first correction for many people new to the Bitcoin space. So this 50% crash, is this normal? Is this something to be expected? What should people do? Discuss the strategy, the solution to spinach hands, to panic selling, to FOMOing in.
The first thing to appreciate is that Bitcoin's been in a 12-year bull market since its inception, and there's been lots of crashes and corrections and all sorts of things in between. But the longer trend is 12-year bull market. So once you appreciate that, but people join at different phases. And at every phase, people have always come in when they're new to this with a fear that they've bought the top. They were the last idiot that bought the top. Everybody is getting out and that they bought it. This inner fear really haunts the person that hasn't really developed the diamond hands yet. So really, it's a game of both psychology and strategy. So I could share with you what the strategy we've adopted in order to get through all these bull markets, but unless you get the psychology right, you just won't be able to implement. And the psychology is that when we're in the bull market, you're in Bitcoin thinking. And Bitcoin thinking is about understanding the supply and demand dynamics of Bitcoin. Bitcoin thinking is, it's 21 million. There's never going to be any more. It's people can own their own money. It's people can spend their own money. It's that everybody needs Bitcoin to combat this melting ice cube and combat inflation, and everything's good and the price is going up and you're seeing your paper wealth increase. You start planning this wealth effect. You start feeling more intelligent than everybody that was telling you it's a scam, it's a Ponzi scheme. It's a currency just for drug dealers. Your Tesla needs it. You're thinking JP Morgan needs it. Apple needs it. Microsoft needs it. And the whole world. And you're on cloud nine. But once it hits into the bear market and we get these corrections, your inner reptilian fiat thinking comes out. And in fiat thinking, it's all about taking on more debt in order to drive more consumption. In Bitcoin thinking, it's all about savings in order to drive a wealth effect so that you can then become an investor with your newly found wealth. In fiat thinking, it's all about scarcity. It's about knowing that your money is going down in value. And then you start thinking in terms of converting your Bitcoin to fiat so that you can preserve the mental wealth and paper wealth. And you start thinking that Peter Schiff was right. You're the last idiot that bought it. But the only way to combat that is to look back, take out the chart, understand that we're in a 12-year bull market and we get these corrections, which are mainly created by the 10% of insiders that is trying to take the 90% of traders that were in trying to just get in for a get rich quick scheme and take their Bitcoin so they can accumulate them.
Max, Stacey, and Simon Dixon were all together at the first Bitcoin conference in Prague back in 2011. We've seen 15 of these kind of pullbacks since then. And every single rally has a big name, and every single drawdown has a big name. They undergo what I call Bitcoin derangement syndrome. We had a big rally coming in on Michael Saylor's purchase over there at MicroStrategy. And now on the pullback, the Peter Schiff has been replaced by a new high-profile naysayer, and that would be Nassim Taleb, who also seems to be delving into Bitcoin derangement syndrome. I think you're the one who pointed out that as the Bitcoin price goes higher, we attract a higher class of Bitcoin deranged people. So clearly Nassim is a higher class than Peter Schiff. He's got more books out there. He's considered to be more of a serious person. But now he's gone crazy. He's fallen into the trap. What is it about some people that not only do they fear the pullback, but they actually go insane, like Nassim Taleb?
They're just scared of the fact that they maybe not had full conviction. They didn't believe that it could go up further. They don't fully believe in the supply demand economics until they've been through it. And so they look to other people. They look to other experts, and somebody that's actually driving forward electricity, talking about the inefficiency of Bitcoin seems like a very credible argument and a reason to actually think, well, this time it's different. Bitcoin's no longer in that 12-year bull market. It doesn't reach higher highs again. And it's that this time it's different thinking, is really what's driving people, and that inner fear of everyone around them, because we're doing this thing that was so impossible to achieve. The thought of creating a financial system outside of the financial system, the thought of actually being able to create something that combats this unfixable financial system, it brings in that inner fear that it was crazy all along and it was never going to happen. But Bitcoin time and time again punishes the people that do that, as they end up giving those Bitcoins to those with the diamond hands in the end.
So you just said that we have an unfixable monetary system at the moment and a banking system. Let's address that. And also, when you're talking about this correction, Bitcoin has often been compared to the internet, the early internet. And TCP/IP was always there. Then www was built on top of it. People could use Netscape browsers, surf the web. And we had the .com 1.0 boom. Then now we have .com 2.0. And finally, it took like 20 years, right, to get to the all-time high. Are we having the same sort of growth as the internet? And is this a new paradigm like the internet was, in terms of all your models are broken?
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now let's continue.
We can compare Bitcoin in terms of just purely looking at the charts to something like Amazon if you want. Amazon has 90% market corrections, but Amazon's a stock that nobody should have sold. Just like Bitcoin is the financial hedge that nobody should be selling unless you haven't done a few things. And one of those is many people, because Bitcoin is also a unit of account and medium of exchange, if it chooses to be, because you can spend it, people actually don't make that separation between their spending money and their savings. So when you're thinking about your spending money, you're thinking about what they can buy. And so volatility is really bad when your goods are priced in something, your mortgage is priced in one currency, and you're trying to buy it with another currency, and you see that deplete away. So one of the first things to learn there is the separation. You wouldn't use your, Amazon stock in order to make purchases, but with Bitcoin you can. So it's a very unique asset class in that sense. And so therefore you have to use slightly different strategies. But yeah, Bitcoin being a protocol and a hedge against a monetary system that actually I talk about unfixable, but there is a solution to the existing financial system. And that's a slow removal from capitalism to socialism to communism, and using central bank digital currencies as the mechanism to roll over all this over leveraged, rehypothecated, Ponzi scheme scams, in order to try and keep the system alive a bit longer. But the solution means the removal of all your privacies, rights and freedoms, which also drives the use case of Bitcoin, because it just happens that the financial system that exists outside the financial system is also the same system that gives you back some of those rights, takes away censorship of financial transactions, gives you the ability to own, and gives you a counter system to this central bank digital currencies and fiat that ever growing in supply.
You bring up the central bank digital currencies, and you put it in the political context of a transition away from free market capitalism toward a more socialistic or communist type model, which of course would mean centralization. And the powers that be are panicking into a centralized banking system, even more so, using central bank digital currencies. I think you were one of the very first to talk about this. And then you mentioned, and this is now happening, how the banks will get bypassed, and these digital currencies from the central banks will be handed out directly in the form, you could call it IMF or universal basic income. But essentially, you're describing this not as a savior, but as essentially a slippery, I guess you could call it the road to serfdom. As the book indicates, this is the road to serfdom, Simon.
Central bank digital currencies are the mechanism for fixing the financial system by taking out with fractional reserve banking, which is, as people learn their education about money, they start to realize that banks create money and it's all backed by debt. And approximately 97% of the money supply is a digital currency, which is a digital representation of the cash and coins created by the government, dollars or euros or pounds. And central bank digital currencies is a mechanism for removing banks from money creation. So at the moment, when you take out a loan, a new digital currency or new units of that digital currency is created by some digital dollar deposits in your bank account, and it's backed by debt. But because the debt is so now over leveraged, the solution to that is a movement towards centralization, where you can let the bank go bust, but you just issue the digital currency directly from the central bank, and you allow financial technology companies and banks to build on top of these central bank digital currencies. While it is a deleveraging and it is a solution, it comes with the removal of free market capitalism, comes with the removal of all those things that a currency that's at least one step removed from governments being created. And it moves us towards an algorithmic, artificial intelligence-led, completely centralized central bank digital currency that is used to enforce government agendas, fiscal agendas. If you're not spending your money in the correct way, then there'll be, algorithmic penalties on that. It will be automated tax collection. It will be multiple governments that are all looking to get their piece of digital transactions that are occurring in multiple jurisdictions. It will be connecting your passport to your central bank digital currency. The gateway drug is free money, helicopter money, universal basic income. Replacing your deposits at a bank when a bank is going insolvent or bust. And you have to opt in to the removal of your rights. It will be connected to your passport. If you haven't got the right things, then this is where money is going. This is the ultimate goal. This is the war on cash. This is the removal of banks from money creation. This is the ultimate form of centralization and control through central bank digital currency.
In such a situation, inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.